What's up, Money Minds, and welcome back to another video edition of Market Briefs. Today is November 29th, and here's some business and financial news you can finally use. Black Friday 2021 felt a little off for markets all throughout the world, and I'm talking stock markets and shopping markets. For shopping in particular, spending was down this shopping season, which is a bit strange for this time of the year. In addition, we saw the stock market also dip at the exact same time. This is after many experts predicted that shopping this season would be even bigger than it was last year, or it would at least be at the exact same level, but it actually dipped to a new 2-year low. The stock market actually dipped last week as well, as we saw some troubling news from the World Health Organization. There is a new COVID variant out there, and they're saying that it is very troubling. So today I want to talk about how this new COVID variant could affect the world, and more importantly, the stock market. I also want to talk about how the low spending on Black Friday actually might affect the stock market and some other markets as well. But before we get into all of that, my name is Nate from Minority Mindset News, and if you like this video, then smash that thumbs up button below and hit that notification bell too. That way YouTube shows our videos to way more money minds around the world, and we can keep making videos just like this one. So first off, the stock market dropped last week. The Dow in particular lost around 200 points. And a lot of experts are saying that this drop has a lot to do with the new Omicron COVID variant. Now, I'm not going to talk about this new COVID variant in particular because I'm not a scientist or a doctor, but I do want to discuss how this new variant could affect the stock market this year and in 2022. Basically, it's a new variant and the stock market doesn't really know what to think about it yet. Essentially, the stock market has some serious whiplash from what happened in 2020. When we saw COVID initially come out, the stock market essentially crashed. We saw the fastest drop in stock market history. Now, this drop didn't come overnight. It happened because thousands of businesses all throughout the country were being forced to close. The country was essentially going on an economic lockdown. What that meant for Wall Street is that investors could lose a lot of money because nothing is really open and consumers aren't really spending anymore. So investors wanted to protect their money, so they started pulling their money from the New York Stock Exchange. This meant that individual stocks, ETFs, and pretty much anything related to the stock market was going down. And that was all related to the COVID virus. Whether you like it or not, the government was trying to protect people by instituting some social distancing orders. This meant that thousands of businesses needed to close in order to protect individuals and industries that had close contact with one another. That immediately constricted shopping all throughout the country. But it also meant that businesses weren't going to be making money either. So if businesses can't make money, then profits are going to start going down. And on earnings reports, companies are going to have to report low earnings and low revenue. During this time, some industries were hit a lot harder than other industries. The travel industry and retail industry were basically pushed to the brink of collapse because there was really no way for them to survive without people. The airline companies need people to buy tickets on their planes, and retail locations need people to shop at their stores in order to make money. On the flip side though, we saw a lot of tech companies start to thrive during this time. Some industries didn't close down entirely because a lot of people were able to work from home, and a lot of students were able to go to school from home as well. But it created a little bit of an issue because people didn't really have any means to work from home. People were starting to purchase electronics at rapid rates, and any company that was producing those electronics started to go up. In addition, we had some entertainment stocks like Disney and Netflix begin to boom because people were spending a lot more time at home and they needed to be entertained. Getting back to the point though, things started to level out as the virus started to go away. And by the end of 2021, things were starting to improve all throughout the country. Things were starting to open back up and social distancing orders were pretty much cast aside. But we started to see some variants of the COVID virus, the first being the Delta variant, and now we have the Omicron variant. And scientists and health experts don't really know much about it yet, and they're not really sure what our current vaccines are going to do against it. All we really know is that it's very strong and it spreads very fast. The stock market isn't going to like this because, like I said, they have some major whiplash to what happened in 2020. They don't want markets to close down again, so naturally you're going to see some investors start to get scared. Nobody really knows what's going to happen in 2022, and they want to try to avoid a situation like they saw in 2020. So naturally they're going to want to pull their investments out in order to save some money. The key thing to remember here is if this virus takes off and we start to see more lockdowns like we did in 2020, well, that could just extend a lot of the problems that we have in society today. All of our supply chain issues and inflation would likely go back up too. And it would likely mean that the federal government and Federal Reserve would have to step in with more monetary policies, and they would kind of have to revert a lot of the policies that they have made at the end of 2021. However, a full-blown lockdown for the United States, and for the rest of the world for that matter, is pretty unlikely because we now have vaccines, and we didn't have that at the beginning of the pandemic back in 2020. Moderna and Pfizer are already adapting their vaccine in order to cover this new variant, which would help us avoid a full-blown lockdown in 2022 and in the future. However, in the short term, that is still going to hurt because a lot of people who can't get the vaccine or are just trying to play it safe are going to shop less, and they're going to be going out less, which means businesses are going to take a hit. It might not be a major hit, but they may still take a hit. And in addition, the United States government has already announced that it was closing off travel to South Africa and 7 other countries because of the Omicron variant. Less travel means the airline industry is going to suffer because of that. The important thing to note here is that the stock market doesn't just work off numbers and earnings reports. It also works off investors' emotions. If investors are excited and happy, then you'll see a lot of money start to pour into the New York Stock Exchange. However, when investors get scared, they tend to pull their money from the markets, and that can lead to a correction or a crash. Now, we've talked a lot about crashes on this channel, but we haven't really talked much about a correction. A stock market correction is when the markets don't necessarily drop by all that much, but it is still a pretty significant drop, typically around 10%. Corrections in the market happen all the time. We see things drop because a lot of the assets on the market are either overvalued or there was a lot of bad investments on Wall Street. Those things tend to go away in a healthy market, and you see a correction as things start to level out and be where they're supposed to be at. On the flip side, shopping trends were also down this Black Friday weekend, and that could also mean bad news for the stock market. Shopping in brick and mortar stores was down by around 28% when compared to 2019. Now, it's important to mention that that number is up by around 47% when compared to 2020, but it's really hard to compare numbers to 2020 when there were so many economic lockdowns in the United States. People really couldn't go out and shop because stores weren't really open. So physical sales were down, but 2021 Cyber Monday is expected to be very similar to what it was last year. Last year, Cyber Monday brought in around $10.8 billion in e-commerce sales, which was the largest digital day ever. 2021 Cyber Monday sales are expected to be between $10.2 and $11 billion, which means people are still spending, they're just not going out in stores anymore. And that means a couple different things. There is definitely a convenience to digital shopping, but it also means that people tend to spend more when they shop online. Because they're not actually spending any physical money, all that money tends to go a lot faster. However, it also means that physical retail is starting to change, and shopper trends are starting to change too. A lot of experts thought that this shopping trend was only because of the 2020 pandemic. However, it looks like these trends are here to stay. And I think things have been going in this way for a long time now. I mean, we have seen the rise of our digital lives pretty much take over the last decade or so. However, this virus has really made that process go a lot faster. But this is also going to be very hard on our economy too. As we've seen over the last year and a half, inflation has pretty much gone out of control. The Federal Reserve has printed around $3 to $5 trillion in stimulus measures, all to keep the economy functioning. Nothing is free, and eventually we will start to see the effects of all of this money printing. While it helped us in 2020, in 2022 we might start to see the price of things start to rise rapidly. As our money supply goes up, the value of every dollar in our economy is going to start going down. That means all of the buying power that you have is going to go down as well. That means it's going to cost more of your money in order to buy all of the same things. Price increases are a natural symptom of inflation, and the Federal Reserve has printed so much money that inflation has gone up to new highs. In October of 2021, inflation hit around 6.2%, and that was the fastest and largest increase that we've seen in around 31 years. Now, the Federal Reserve and federal government says that a lot of the inflation that we're facing today is because of our supply chain issues, and that definitely checks out from a retailer's perspective. Out-of-stock messages appeared on websites and on shelves this past weekend and increased by around 124% from 2020 and 2019. That means there is way more demand than the supply of things that we have. And when we see this, prices are naturally going to go up, and you're going to see inflation in pretty much every industry where demand is so high. And things are so tight right now because people are spending a lot more money. There's a lot of pent-up demand because of all of the economic lockdowns that we saw in 2020 and in parts of 2021. In addition, our unemployment rate has hit around 4.5% by November of 2021. So people have more money because people are employed again. They're making that consistent income. However, this all could change because of this Omicron variant, because if our supply chain is pushed any further, that could lead to a major collapse. Demand is so high right now because people have money. However, if people begin to lose their jobs because of economic lockdowns, this could mean that the Federal Reserve needs to print more money in order to save our economy once again. Printing more means inflation goes up, which means prices are naturally going to rise as well. And if this Omicron variant takes over and the United States government needs to close down our borders more, that means our supply chains are going to get disrupted, which is exactly what we saw happen in 2020. Because so many industries were closed down, that meant that nothing was getting shipped to the United States and nothing was getting delivered to your door. That pushed everything behind for months in 2020, and we're still trying to catch up to all of the demand. In addition, people had so much extra money because of all of the money printing that the Federal Reserve did that they were able to buy a lot more than they probably needed. All of these things make a difference to Wall Street. Because at the end of the day, if people are spending a lot less money, then that is going to equal less profits for companies. Less profits mean that on these companies that report on the New York Stock Exchange, they're going to have to report lower revenue and lower profits and lower sales. Investors don't really like that, so they're going to eventually pull their money from the New York Stock Exchange. And the Federal Reserve and the federal government does not want to see the New York Stock Exchange crumble. I mean, there is so much money on Wall Street and there are so many investments and assets tied to the stock market. This could hurt our economy in the long run. Just for political reasons, no president and no chairman of the Federal Reserve wants to see our economy fail. So they're going to do whatever they can in the short term in order to make our economy better. And our economy is supposed to be recovering, but it is very fragile right now. Because inflation is so high, this means that naturally people are going to spend less money because things are so much more expensive and they can only afford to buy things that they absolutely need. So here's what you need to know for 2022. This Omicron variant is here, and health experts like the World Health Organization are saying that it is very serious. However, we're not really sure how it's going to affect the economy yet, and we're not really sure if it's going to lead to a full-blown lockdown. This is unlikely because of all of the vaccines that we have. However, if things get pretty serious again, we're only going to see the current problems that we have explode next year. Inflation could get worse because our supply chain issues are going to get worse, and the stock market is not going to like any of that because people are ultimately going to be spending less. This could lead to a complete reversal in monetary policy by the Federal Reserve, and we could see a lot more stimulus come out in our economy. However, on the flip side, if this Omicron variant isn't that big of a deal, then we'll likely see what happened with the Delta variant. Some small corrections in the market because some people are going to be afraid and not really sure what's going to happen next. However, this would not be a full-blown lockdown, which means that our economy and the Federal Reserve policy would likely continue in the way that it is scheduled to. The Federal Reserve is planning on making at least one interest rate increase in 2022. This would essentially pull back a lot of American spending in general. It shows basically a healthy economy because before, interest rates were dropped to nearly 0%. This incentivized people to go out and get money. It incentivized them to go out and get loans because interest rates were so low. They could afford the payments on those loans because they were so low. However, if interest rates go back up, that means people have a lot less access to money. And this is the current plan that the Federal Reserve has talked about. These plans are tentative though because of things like the Omicron variant. And if shopping trends continue to fade and Americans start spending a lot less money, then that could lead to the stock market ultimately going down too. So it all really just depends on what happens next and how the federal government and Federal Reserve decide to react to this new virus variant. But now I want to hear from you on this issue. What do you think about this new COVID variant? Is it going to cause a full-blown economic lockdown, or is it nothing to really worry about? In addition, how do you think our economy is going to fare in 2022? Do you think that there will be a lot of spending by consumers next year, or do you think that spending will hit a new low in 2022? Whatever your thoughts are, leave a comment below before you go. But that is it for today's Market Briefs video breakdown. Thank you so much for watching. If you like this video, make sure to hit that subscribe button below. Keep hustling, money minds, and I'll see you all in the next one.